Great, this is my market preparation video where I wanted to explain to several traders what I look for. This is ES, so I took some notes just to make things a bit clearer. Sometimes it helps. In this case here, uh, what I'm looking at is it's a strategy that I knew it existed. I've been doing this strategy for a while now. I've been looking at levels. I firmly believe that the auction market theory basically tells us that price matters on a horizontal level, and it's time development with volume development that is the indication of how uh, the auction is processed. Um, I've got levels that go all the way back to January, December of 2020, and um, I kind of level out the most recent supply and demand areas that I look for on a 4-hour chart. I combine it with the market profile since basically 2019. I go back at least 6 to 8 months, and this is the market profile that is the volume profile that's been created at each level, coming going back all the way to like December and January. This is the most recent um, day's auction. This is the ES. So with my supply and demand areas, I firmly believe that these areas will act as inflection points. So basically, market will either stall there, stop there, reverse. These are areas that filter out the noise for me, and I look at low volume areas and high volume areas to confirm the bias of what's holding. So if we're going down, um, for example, um, I want low volume areas to be giving us areas, basically low volume nodes to give us like a bias that the downtrend is pretty intact. It's still a downtrend, you know. So going down, you want low volume areas to hold as resistance, and going up, you want low volume areas to hold as support. That's how I see the market. So here, just one example. So using supply with 4-hour charts. So basically, the market likes to. So basically, the market likes to hold areas that were previous supply and previous demand. So this is the most recent supply that we had here on May 20th at 29.52. For me, supply is basically a level where a new 4-hour candle, if we're looking at 4-hour supplies, so basically the 4-hour um, time frame gives me a better midterm direction than just looking at 30-minute auctions, you know. So I want to stay on the 4-hour chart for now, but I'll show you what I also look at, how I look at the market profile with 30-minute auction as well. Especially on NQ, it's a bit more sophisticated, but I like NQ, especially on the intraday swings where you have good levels to give you great opportunities to go in and go out. I can use those levels as targets as well. So on this 4-hour chart, if we look at June 15th, which is today's date, we just created a new demand zone in my way of looking at this. So I basically putting changing colors for now, but I'm just gonna write it here. It's a new demand zone that was created, which is basically 29.7150. This is ES, yeah, sorry, it's ES, so 29.7150. And what is this? We are 15th of June 2020. Actually, I'm not gonna do it that way. 15.6. So that's the most recent demand zone we've got. And I'm expecting 3041 as the supply here to give us a good area to look for shorts. And I'm basically looking at the auction this way. So it's the most easiest way to explain this. So you have my notes here. You can go back and look at what my notes are here. So basically, I gave an example here with a 2952. The 2952 was the latest supply we had in May 20th. And as you can see, market was not able to spend at least 3 or 4 candles below the 2952. Okay, I'd say one, two, three, but it never really spent a lot of time under that. Get it? So when it doesn't spend a lot of time, it just gives me a basis that the bias that this 2952 could probably hold as good support for me to look into buying the market. Okay, and if we look at another example, this supply here, 6th of June, yes, 3041. So at that 6th of June here, one candle, two candle, three candle, 4 candles, at least 4 candles spent time below this 2952. So sorry, the 3041. So that kind of confirms that this supply is going to be very, very important. So this 3040 was going to be a tremendous area of, probably we're going to spend some time around this level. We won't just flush through it, and most likely, even if we do flush through it, we might come back to retest it to kind of like confirm that it's going to keep the bias to go up. You know, um, if you look at the example here, this was 11th of June, the supply at 3086. This was coming back from FOMC. So we had one, two, at least three, good candles that were spent below that level. I generally look at 3, 4 candles. After that, I kind of suspect that we won't get downside momentum very easily. You get it? So once we're already 3 or 4 candles down, it kind of gives me a bias that the auction will be hard to just go down all that easily. If you go back any period here, um, I'm trying to see if I have the most recent here. This is the most recent supply that's a bit more. I have them on thicker. I see them thicker here. I don't know if you guys can see them thicker, but this one is thicker. So that was supply. We had at least 3 or 4 candles below that supply, and then we had a flush. So that supply held again, the 3216, and we retested that again, and we could get retests of certain supply levels. And generally speaking, after we have, I'd say, 3 candles, 4-hour chart, 3 candles below a level without creating a new level. Let's say I don't see I don't see any new demand or anything that was created here. Basically, this is telling me that the down auction is going to be hard to continue. So I'd say it's better to wait to get back to certain levels before looking for shorts. You get it? So anywhere here, shorting would have been hard because it's 1, 2, 3 candles already below that supply. We didn't create new demand here. Okay, if there's an example where we would have created new demand, it's the most recent auction as today. Let me show you here. If this 2971 is not retested in the next 4-hour candle, for me, this is going to be a very important demand zone going forward. Another thing is it also sticks right at a low volume node here. That means that market did not want to trade at this level. You get it? So market kind of like rejected this level. That's good for bulls because bulls know that low volume areas should hold going up and low volume areas should hold coming down. So if ever we get to this 3041, it's got low volume here, right? I'm suspecting that this market will at least auction here. We'll have two-way auction, good way, good rotations for at least 1, 2, 3 candles. That's 4-hour charts again. So at least for another 10 to 12 hours, once we get here, we'll have good auctions. And now it's crazy because what happens is even previous supply becomes tremendous areas. This 3028 to 3041 is a level where, I mean, again, it's 10 points, but if you're playing micros here and you know that these levels are going to have good confluence, you'll have good areas to scalp around a position. Okay, this is a strategy that was kind of introduced to me by another trader who was taught by a pit trader. And what I did is I kind of looked back and I've been kind of playing around with how I could tweak this for my personal trading, and I've noticed that this is the best way for me to get mid to long term auctions right. I can't be right 100% of the time, but if I'm right 75 to 80% of the time, this is going to have a big edge for me. This is my edge in my trading, basically. Um, I know there's a lot of lines here, but I mean, unfortunately, it's just because I have like demand zones going back all the way to December, you know. So I'll show you an example where like some traders were telling me like, Osman, it's how is this possible? This is you know, the market doesn't react. It's not a question of this being easy, but it's a question of having areas to filter out the noise. Okay, let me show you what happened recently that was very surprising. This 3216, yeah, the 3216 goes back all the way to December. Okay, look at this. How many times did the market bounce off that 3216? Look at that. You see, and that was an example where, you know, I didn't know this. I didn't know that the market was going to bounce off that, but there's a high probability that we're going to have good bounces off of that. You get it? I just wanted to switch to Nasdaq here. Nasdaq recently gave look, this previous supply that we had here, the 9689, okay, and this 9701. This is a demand going back to May, okay, and this is a supply. So you could have areas where it was previously demand. So going back in May, this area was a good area to buy, and going back to February, this was an area to sell. So when you have areas that are very close like this, I'm suspecting we're going to get good chop here. We can, you know, you could front run this gradually going in. If you don't want to front run that, well, you want to at least wait until you get to this low volume area, then the 37s, then, you know, this is an area. And then I use the auction within the footprint with my dome to give me like good areas to short, and then I'll just scalp around it, you know, make 20, 40, 60, 80, 100 bucks there and here and there. That's exactly what I like to do. That's my style, because in this market that's going up, as a trader, you're like, okay, what do I short? You know what I mean? You have to really have a bias where the the auction going back has given areas to really rely on. And I've noticed that this strategy functions very good in my way of trading, and especially if I trade the micros. I mean, the way I see it is supply and demand is all about where participants want to do business, you know. So going back to Nasdaq here, this, what is this? It's 98.97. This 98.97 created demand on the 9th of June. Okay, so that basically went up. There's no supply in my methodology here that was created. Okay, and just getting now an alert on Amazon, where I just want to go see what Amazon's doing. Amazon is basically, I'm using the same strategy with Amazon just to show you that Amazon is on a rip now, and I could suspect that this will help Nasdaq going up, because Amazon, if holding this demand zone for Amazon has been my strategy here, and I just suggest that if Amazon's going to start going up, you don't want to be a seller on Nasdaq. That's how I look at the correlations with these big market, with these big stocks, especially Apples and the Amazons. And this is my market profile going to going with the 30-minute. One thing with the 30-minute is it filters out the auction. So I've had at least four 30-minute bars that have gone above the previous day's time point of control. So we've got good development above that. We've got decent volume above that. And this 30-minute single print, which is at this level, the 96.27, has not been retested by the next candle. So this in the 30-minute time frame gives me an area to spot um, bias. So this initial balance high where it broke out, basically we've got the time development, so we've got at least three candles above that, which is perfect. And I'm just drawing this, putting in colors just to show you guys that, you know, for me it's just all about visually seeing these. And I'm having a hard time drawing this, but it's just a way for me to, you know, filter out what I'm looking at. So that 96.27, anytime price gets there, low volume node with a single print, this is a demand zone that's looking to be held. So that's 96.27, 15 June, single print, right? So that same 96.27, the single print here, that's my zone to look at, kind of like filter out what's going on. Now we're hitting previous areas. These blues are previous time point of controls, meaning on Nasdaq in the last couple of days, those areas have acted 96.7. So those areas have acted as previous areas where market basically spent a lot of time there. This is important in my way of trading because I don't really want to be aggressively buying into those areas. And now I'm getting good filter where, I know that the bias is to the long side, right? And I know that my target here, the 73, 89, 73 is probably the target where I don't want to be too long into that. And, if we get decent volatility in the dome here, I could look to short, At the moment, I'm just looking at the tape, and ES is getting some blocks coming in, but ES, I'm just going to double check here on ES. ES is coming to that 28. I mean, between 28 and 41, ES could still ride up to 41. So if ES participates in this move up, I'm not sure if I really want to short. But again, look, anywhere we get to that level, I think the Nasdaq could give good opportunities. 83. So then 89 to 01. I'm just looking at the dome to see if there's big sellers anywhere in these areas. 90 looks like someone's participating. The 90, 94 areas, So these are good areas to always just filter out. And I'm stalking a short, but I don't want to be very aggressive on the short side. You get it? And especially if I play the micros, it wouldn't be a bad way to expect some kind of auction, back and forth auction in this area. Sometimes that's a thing. Some traders will say, "Are you bullish? Are you bearish? What are you?" I'm neutral. That's what I am. I see the markets as ranges. We range down, go retest certain levels. We need to spend some time above that to give me a bias that we want to go higher. And then if we spend some time below that, that tells me that we want to go lower. So any pop to the top, to, to the to the highs would basically be areas to sell. So in in our Nasdaq situation here, we basically had a new supply that was created here. I think I forgot to color it in, but here. So that was my new demand. So this is basically 95.31. We are the 15th of June. It's demand. And I just want to put that in a bit bolder green so that I know that this is, I don't know why I'm getting these things here. Okay, so demand, 4-hour demand, a bit higher. Okay, a bit bolder here, just to, this is just my way of saying, okay, this is a new demand zone that was created, and this is a supply zone that was created that's still new. This as well as a demand zone. So basically we had a demand zone here on the 6th of May. So I don't want to go all the way back, but you could clearly see that that 6th of May demand zone, which we had here, got rejected by this big, huge selling that came in. So that means 1, 2, 3 candles spent above that. So I would have thought that we were going to basically hold above it, but we rejected with this huge volume. So that kind of also set the tone for a bearish direction here on Nasdaq on the 12th of June. And then any retest into that zone with the time development here kind of told us that we should still look for shorts. Just looking at something here. So basically, I wanted to highlight this here again. I also noticed that I forgot to draw here on this candle. That's not it. Sorry. So this is Sierra charts. This is how I use my levels, and it's a lot easier this way. Um, this is an area here that the market showed us on the, how you call it, on Nasdaq here. I just want to show it because it looks like the market got to the supply, okay, but rejected it firmly, and that supply has become demand now. That was a supply, that level here in the overnight. Um, we had time development, so I'm suspecting that that 95.30, okay, in the overnight once twice rejected. You get it? But as soon as we built volume above that 95.30, if I can bring in the Nasdaq here, right? So what level? Where was that level again? Sorry, I just want to put that in. Yeah, so that same 95.38 here, if we look at, again, this is market profile, every movement here, every letter is a 30-minute candle. So that's the break right there. We had a break there. So as you can see, once, twice, we had several rejections of that area. But then we opened below it, okay, and 95.38, as soon as we start creating volume above that with 1, 2, 3 candles above it, you see, 1, 2, 3 candles, it's up again. So that was the level to look at for Nasdaq. And also on the 15th of June, and also the 15th of, sorry, that's the new demand that was created as of today. So that was the previous supply that was created overnight. So this gave a confluence of an area here. Holding above this area meant we're going to continue going up. And then the way I look at this was the blue here was time spent. The market spent time above this, at this area on a previous day. So unfortunately, I did not write it down, but normally I would write which date that was. And look at how the market auctioned above that on a 4 or 5 time basis here on a 30-minute chart. This is tremendous information. Market is spending time above this area, rejecting the lows of this area. So previous area that was spent, that market spent time here, this is Nasdaq again, is holding as support. And now it's basically creating these new demand areas. So our newest demand area is 96.27 intraday. So that's how I use the intraday information to give me a bias of how the market works and where the market wants to inflect. These are inflection points. Okay, and look at our 30-minute. We're back in that 89 level here, 89 to 99. I'm going to basically look at shorting gradually. I'm seeing sellers coming in on ES. So let's see if we can get some shorting momentum here on Nasdaq. So here, so Nasdaq 92s, just for fun. Let's see if, I mean, Amazon is taking off as well, so Amazon is probably going to help move Nasdaq a bit. Apple is holding above that demand zone. This is Apple, this is Amazon. I'm going to put that aside here for now. But that 89 is creating 89 to 92. I said 01, 89. This is an area where we might get auction both ways, right? That's exactly what I said here. If we look at our market profile, here's that 89, here's our 01. So that's a 10-point range where we're going to probably get retests of certain levels, go back down. We need to spend some time above these areas. And I suspect that this 77, if it doesn't hold this low volume node, we're probably going to go back into the 66 and basically rotate around these levels. Okay. let's look at the tape here. So a couple rejects of the 89s tells me market might want to go lower just to rotate, So it's not fully bearish. It's just basically scalping ideas. 92 rejecting again. I mean, anywhere around this 01, 89. If we start getting some, I mean, look, ES got some, there's selling coming in, but nothing really majorly bearish. But so that 89 has given some decent hold. It's holding, so I'm just gonna see. I'm gonna put it here. Supply inflection area for me. I'm just putting notes here, and you see these guys. Look, why are these guys around? These are big guys who want to sell out the O2s, O1s. I'm putting here big sells, big sells. It's my way of giving me information on the recent auction. We're not getting decent selling off this 89, so I suspect that the market will try to go higher, and if we're willing to sell, we're gonna have to look to sell above it. Above it. Again, I'm not selling because I think it's fully bearish. I'm selling because I think the market will most likely need to spend time at these highs. Okay,